Hey, everybody, it's Jeff here once again with the Money Trekker podcast. And it is Friday, Financial Friday. So we're going to have Tom Kemler on with BK Wealth Consulting. Tom is going to share with us a little bit about shipping. We've got, it's been this never ending story of shipping issues and causing, the supply chain to really be lagging in a lot of cases. So Tom's really going to dig into that a little bit deeper today. We're going to talk about a sad subject. The cost of chocolate is going up. So that's something that, when we look at inflation, for those of us that like hot chocolate or chocolates, it's going to get more expensive. So I'm sorry to say that. We're going to talk about Powell and the inflation and what our Fed governors and our government are looking at from inflation and how the market is pricing that into the market. And then we will have an most interesting thing today. So hang on, we'll be right back in just a second. Jeff here, and I have my friend Tom Kemler on. Hey, Tom.
How are you doing, Jeff?
Fantastic. How's your world today?
Tremendous, Jeff.
Well, we've got a lot on the show today.
We do. I don't know why, but I have a lot more slides than normal. So.
Well, you were on your shipping pages, so there's got to be some slides on shipping there. Okay, so what do we want to kick off with?
We'll start off with shipping.
All right.
Yeah, I thought what we do is start off with shipping. We talk a little bit about the positive economic surprises of the week, then the negative economic surprises of the week, and then try and tie in. Here's a preview for a lot of folks who probably already know the negative surprises this week were inflation. So I thought we would kind of tie that a little bit in with the equity and bond markets and what's actually going on at the fundamental level in those markets, and then we end up with talking about the most interesting thing. Okay. But even before I get started, I think I always like to try to tie in from last week's most interesting thing. And, as folks might remember, that was the assassination of the Haitian president. The entire week has been full of revelations. Let's just say that. There continue to be an upward number in terms of how many guys participated in this thing. They still are looking for some. I read just before we came on here that they have now arrested 5 of the top law enforcement officials in the country, including the head of the president's security detail. So it appears that it was probably an inside job. There's ties to America. There's ties to the DEA and the FBI. Apparently, a number of these guys worked as informants for both of those organizations. So it's interesting enough that it might be a most interesting thing again, but wow. At least that's the follow up on it. But yeah, what I thought I'd do, we teed it up. We're going to take a look at some shipping. So we've got Port of Los Angeles, if you can see that.
Yep.
And this, what I chopped off the picture at the top, which is kind of sad. All you can see is a little bit of water, but I needed to get these first few sentences of this article, because what I thought was amazing about it was not only these TEUs is 20-foot equivalent units. That's a container size. Mm-hmm. But what they were, this final sentence was amazing. In its last 12 months, it set 8 monthly records, had two of the highest performing quarters it ever had, and the top 4 individual months in history. So, it's not just, this has been a sustained situation, as any of our regular viewers would know, that the shipping world has just been on fire. And it's not just on the West Coast. Here we are, South Carolina, Port of Charleston sets a new record. Who knew?
That's an old picture, because look at that empty lot right next to it. There's no way.
Stuff's clearing out of there.
Yes.
That's unlike Los Angeles, though. Part of the deal, and this may be, a little bit too deep a dive in there, but, Los Angeles is in a basin, and, the geography is kind of tough. And so, you got to basically take stuff out of that basin and up and over the Sierra Nevadas to get it to the rest of the country. Mm-hmm. And it takes a while. So Union Pacific has a huge rail operation into LA and Long Beach. And basically, they fill up these trains with as many containers as they can put on it. And it's got to chug, up and over the mountains. And it's a logistical deal. So there's a lot of congestion in LA anyway, a lot of the time, because you just you're limited by the ability of getting stuff out of the basin and onto the rails. So, someplace on the East Coast, you're right near interstate highways, you don't have, and rail lines, you don't have mountains to contend with, population centers. So they can clear that stuff out pretty fast. Mm-hmm. This is our chocolate thing. This is a picture of some cocoa beans, and apparently the Ivory Coast, which produces the vast majority of the cocoa beans in the world, has not been able to get its produce onto the crowded cargo ships. And so we'll say it here first. You might be looking at either a chocolate shortage or certainly higher chocolate prices. So in the spirit of what we saw last year, it might be time to hoard chocolate. I'll just say that it'd be a lot more fun to hoard chocolate than toilet paper.
Yeah, absolutely.
Put it that
way. It's just much more down to earth thing to do. So yeah, I totally agree.
But this is, on a serious note, though. This is part of what we've been talking about in terms of some of the cheaper goods in China. When shipping rates get high enough, the chocolate is a huge value-added product. So the beans that come out of the Ivory Coast, they're essential. But like a lot of agricultural products, the farmers and the beans, they don't get much for it. It's a low-priced commodity, and it's got to be processed and reprocessed and then ultimately made into chocolate, and that's where all the cost and expense goes into it. So when it's in the bean form, it doesn't command enough of a price to be worth putting on a ship if shipping is expensive and they're allocating space by how much people are willing to pay.
Yeah.
And so that's kind of economics meets chocolate, and the bottom line is that chocolate prices are going to rise until it's worth putting the beans on ships.
Just like cheap plastic toys, like we've talked about in the past.
Exactly. So you knew that last week the Biden administration issued actually an executive order that basically said that the world's shipping lines were engaging in anti-competitive behavior. That that executive order, I don't think was really worth the paper it was written on. It didn't have any real power other than what they used to call jawboning. But it went ahead and did it anyway. So I thought I'd talk about that for a second because, that an industry is getting a lot of returns when you get the president, anytime he steps in and says, hey, you guys are making too much money. So the World Shipping Council has come back and basically said, hey, this is, not a normal thing. Once things get back to normal, the supply chains are going to level out, and these are just part of, the reopening after COVID and, some things that are not synchronized. So that is, and they're also talking about what I was mentioning about LA with this lack of rail and truck capacity and the ability to pull stuff out of the LA basin, which is a pretty standard problem at any given time. But not everybody is making a ton of money in shipping. And so I thought this was interesting, especially after we've talked about the Ever Given and clogging up the Panama Canal. You see this headline, it says Suez Canal revenue hits record. Well, geez, that looks big, but then you see that the previous year's record was 5.72 billion. Mm-hmm. So, their revenue went up by about 2.5%. And that's nothing compared to the 500% that we've been seeing in the shipping business. So, one of the things that we talked about was, when the Ever Given got stuck, was that it didn't appear to us that the Suez Canal was charging enough money for its services. And they didn't make enough money to have a robust infrastructure on hand to be able to come and dig out ships. And so I don't know if that's going to change, but it also puts it in perspective that the 550 million that they charged the Ever Given for blocking up the canal is, basically equal to 1/10 of their annual revenues. So that was a huge fine.
Yeah.
But that's enough about shipping. I think we'll take a tour into the economics this week, and we'll cover the positives first. Empire State came in way huge, double the consensus range, more than double the consensus. My mouse is double clicking on stuff. Sorry about that. Retail sales number came out this morning. This was above expectations. The consensus was for overall retail sales was to drop again, and it came in above the range. X vehicles came in above the range, and X vehicles and gas came in towards the top of the range. So a much stronger number than was predicted. And now we'll look at some of the negatives of the week. The CPI came out on Tuesday, and it was a lot higher than expected. This was, things were supposed to remain kind of the same as the previous month, which was May. And instead it accelerated quite a bit. And so we were above the consensus range month over month, year over year, and then some of these, X food and energy month over month, and X food and energy year over year. Last week I said I would stop posting Redbook when it quit making records. Well, I think it may have. I've just had one more to show that maybe we've gone over the top. Redbook had been up 19.4%. That was the highest reading ever. It dropped by over a quarter in just 1 week. So, still an extremely strong number because it hadn't been above 10% or very far above 10% this entire century until just the last few months. Philly Fed, which is just kind of sort of down the road from the New York Fed, had a different number. They didn't meet consensus, and sagged a little bit further than they were expected to. And then the consumer sentiment number that came out this morning was kind of awful. A lot of people immediately said, well, this is basically the problem with inflation, that people are going to start getting bummed out about it. And so this number, was way below, the consensus of 87. They thought things might actually improve a little bit, but instead it missed the consensus and the range by quite a bit. I mean, that's a huge miss in percentage terms. And then the PPI number, which is the industrial version, the producer price index, or inflation that's basically upstream from the consumer. This was another deal where you can see the consensus was we had a lot of inflation that had been reported in May. It was supposed to contract a little bit in June, and instead it accelerated and was above the consensus range everywhere except for the very bottom year over year, ex food, energy, and trade, which I always love it when they keep saying, well, we'll cut out all these things to give you a core. And it's like, well, what's left? I mean,
yeah. Well, I mean, maybe toilet paper.
Yeah. So anyway, it's, the inflation number was bad for the consumer, and it's in the pipeline. So what does the Fed say? It's still transitory. That is not only what the Fed said, Jay Powell said it this week in front of Congress, but the market is saying it too. So, we can talk on the one hand about what we see happening in the numbers, but we also have to basically acknowledge that the markets up, down, and sideways are continuing to shake it off. I don't know why, but we have to acknowledge that. So why would it be transitory? Well, the Bureau of Labor Statistics and Moody's came up with some ideas. They basically said a lot of it is new and used vehicles that have really been punching upward, and then
maybe it's the fact that we've got 40 to 60% higher gas prices in a year.
Well, there's that too, but they always that's X energy.
I know, it's X energy.
Export, you're not really paying that. They're Xing that out.
It doesn't exist. Yeah, it's just like food. Yeah, no big deal.
So, but these are cars. Cars are a big thing in terms of inflation. Here's lumber that we've talked about quite a bit. So I wanted to show lumber from two perspectives. And this gives you an idea that it could be transitory. Back in the middle of May, we hit a price that was over $1,700 per 1,000 board feet. And we're now back down to around $550. And so you can see it's an amazingly steep drop. That's about 70% in 2 months. And what does that look like on a longer term? And I'm sorry I chopped off the word lumber, but this is lumber basically since the great
Trust me, it's
crisis.
lumber.
Now, website blocked.
Denied.
I don't know what website would be, because this is a slide. That's my Malwarebytes, plug for Malwarebytes, working in the background.
Obviously it works.
Obviously it works. But one of the things that's interesting about these, when you get these charts that are, for a lot of years, what they'll do is they won't capture the kind of intra-month peaks like this. They only take one reading a month, and it's usually like on the first. Mm-hmm. And so what you have in a case like this is that this is why it's really showing 1,000, because within 1 month, it had gone up to 1700 and came back down. And so on these longer term charts, you don't even see that. So that's why it's important, if you do a lot of chart work, that if you want to explore some of these things, you can see that there's a lot of detail that could get lost if it happens in a very short period of time, and you get into a long run series where just logistically they can only put in one observation per month to give you this chart. But this is what I was saying, is that this is the end of the great financial crisis back here in 2009, and for over a decade, basically lumber prices were between 250 and 500, and then they exploded. Well, they're just getting back down to the top of this range. So even if it stays at 500, that's still pretty rich compared to where we were for a decade. And this is a kind of a confusing chart, and I won't spend a whole lot of time on it, but I love the colors, for one thing. This was from Moody's, and this is corporate bond issuance. And there are two things that I wanted to show people in this deal. The first is that with interest rates as low as they are, and with business picking up the way it is, interest rates are low, business picking up, you would think that corporate bond, that corporate and financial institutions would be issuing a lot of bonds. It's cheap to do so. They got a runway to look at business. And so it's interesting to see in 2020 that we're tracking below last year and kind of sort of near what the previous 2 years were in terms of size. So this is how many billions of dollars, and this is in the US, and then this is in Europe. Europe, it's actually tracking a little bit below all 3 years. The other thing that I wanted to show with this comparison, particularly as we worry about inflation, the United States has been much more profligate, I would say, that's my word, with how much money we've been spending in our government relative to the European governments. And so there's been this concern that the US dollar, which is the reserve currency, is on the verge of being replaced or losing its dominant factor. Well, you can just look at this and see that we're still issuing more than double the amount of, in terms of corporate bonds, in terms of dollars, more than double what they're doing in Europe. So the rumor of the dollar's demise is greatly exaggerated, and that's part of the whole idea of the market shrugging off inflation. This is another case of the market shrugging off inflation, and this is why we're getting towards record lows here in terms of the extra yield to hold speculative grade corporate bonds, which is speculative grade is anything that's double B and below over treasuries. And you can see that it's this spread. I mean, this is a great financial crisis. It shows when and this is COVID. When the market panics, you don't want to hold speculative grade anything. And so right now there's no panic, again, and not concerned about, wait, what happened there? This is out of order. Sorry about that. I was wrapping up on the bond market, but we'll move ahead to the stock market. The Fed balance sheet is this white line here, and the S&P 500 is the orange here. I thought this was a very interesting juxtaposition between the two. Now, there's a lot of people that have been saying that as the Fed balance sheet has been the only reason why the stock market's been going up, and there are a lot of other people that have been saying, well, there's other factors. this is a pretty compelling looking correlation anyway. But you know what they say in statistics, correlation does not mean causation. But I thought this was fascinating. I mean, you know, these two lay right on top of each other. This was the spreads number, and then I've got another number coming up here, which is you know, stock prices compared to operating margins. And now the people that were in the camp that, oh, Fed policy doesn't affect you know, the size of the Fed's balance sheet doesn't affect stock prices. It's the actual performance of you know, of the companies themselves. Well, here's some performance of the companies. Now, this is not anywhere near as correlated a pair of charts, even though they're laid over top of each other, as the money supply was. You know, back here. I mean, this is pretty dramatic. This, you know, coming out of the great financial crisis, you can see corporate profit margins exploded to the upside, but yet the market took its time for a few years to get in gear, and then corporate profits kind of went sideways for a number of years, and the market continued to march higher. You do have a correlation between the you know, the COVID drop and the COVID rebound, but you know, if I had to compare for the folks who say that, well, you know, the stock market is rising because of individual company performance versus the people that say the stock market is rising because the Fed's pumping money in, my money's on this chart. Mm-hmm. So this is kind of you know, let's just say this is kind of something that maybe a lot of people in the investment business would whisper, you know, and not really, you know, call attention to, but you know, we have to say it out loud. That sure lays one over top of the other. Mm-hmm. Which, you know, again, you know, should we get into a situation where the Fed has to tighten because inflation comes about, you know, that would be a real risk to the markets. You know, if they had to pull back on the balance sheet because inflation was getting out of control and it wasn't transitory, I think that would be a problem. And then I think the next thing we're coming up on is the most interesting thing, and so there we have it. I don't know how many people have noticed this today or this week, but some of these images that are coming out of Europe are just unbelievable. Some of the worst flooding in a century in Germany and in Belgium. I've got 3 pictures here. This one was in the Wall Street Journal. This is some trucks. This is actually on a road. These are tractor trailers that are in Erfstadt, and then this picture, an aerial view. I mean, this was a flat farmer's field here. I mean, look at the erosion. Where, I mean, you've got a canyon that got created by this runoff. That's just amazing. I don't even know how to you know, figure, you know, where did all this material go? Like, how big was this field? Now, you know, again, we're a show that talks about economics and markets. This is closed the Rhine River to shipping, and the Rhine is not quite the Mississippi of Europe, but it's kind of close. I mean, there's a lot of economic value that's not moving on Europe because of the floods, as well as, you know, the terrible loss of life and you know, the highest damages that we've seen in some places since World War II. So very sobering. but just an amazing picture. I mean, this is something that almost looks like it was computer generated.
Yeah, exactly.
So that's what I had for the week, and just thought I would wrap it up there. So if anything, if we're seeing additional stress on supply chains with these floods in Europe, it could only incrementally, I think, add to some of the inflationary impulses. Supply chains are not getting back to normal. They're getting, in fact, even more abnormal.
Mm-hmm. Yeah. Well, and of course, we had a little bit of news, the ongoing news out of Cuba too, with with all this stuff going on in Cuba, and people are trying to fight against the communist regime. And I loved, it's scary that they can just shut down all communication. Oh, there's people in the streets that are complaining. Shut the communication, or shut them down to the outside world so nobody can see anything.
Yeah. The thing about Cuba, though, is that and it's kind of like Haiti, like that we were talking about last week, which is it's interesting from a human interest perspective.
Mm-hmm.
But both of those economies are so terribly small.
Yeah.
That really, the threat from both of them is the destabilization they would cause if people just flee. And we've seen people flee both of those countries in huge numbers on a number of occasions in my lifetime.
Yep.
And so there's a real threat. That was one thing the Biden administration was talking about this week about, don't start another boat lift, because, it's interesting that they're not interested in those immigrants.
Well, yeah,
if they would boat over to Mexico and get on
you
land,
can just walk right over the border if they came across that way. But yeah,
they don't want them going to Florida.
I guess. I mean, they'll vote on the other side of the aisle from us if they do. So,
oh, there is that.
Yeah.
I wasn't going to say that out loud.
Well, I don't mind saying it out loud because it's complete and utter BS. I mean, these are people that have got a legit complaint that their world is being, that their lives are in danger. I mean, there are people literally being disappeared off the streets there.
I've seen some pretty tough videos of people getting arrested and shot even in front of people taking videos.
Yeah, it's just so crazy. So I mean,
I don't know what's going to happen. That government is, they've got a pretty impressive security apparatus.
Yep.
And I just, I feel for the folks that are out in the streets, but I don't know. I can't see it.
I just don't think they have the power to really do it.
No, they're just too beaten down. They don't have anything relative to the state.
Yeah. I mean, and there's literally no economy just per se. There's money that actually comes into Cuba. It's just the upper echelons get to keep it and everybody else doesn't. So I don't know.
There's a lot of
as long as I've
the one thing about Cuba this weekend, which I guess we've morphed into a second most interesting thing here, but what'll happen over the weekend, apparently there's like a major boat flotilla that's going to head out of South Florida that's going to try to take some supplies down to those people, and it's going to bring up two questions. The first is, whether or not these people how will they be treated by the Cuban authorities? Folks with a little bit gray in their beards, such as myself, might remember that many years ago they had some airplanes that would do stuff, and the Cubans actually shot down an airplane from a group that was, it was a small airplane. They were taking Actually, I think it was the airplane itself was like a radio station, and it would fly near Cuba. But anyway, the Cubans shot it down and killed like 3 guys, and that was kind of the end of that effort. So they're not afraid of killing people, and including Americans that might come close. So
Yeah.
and then the other thing is whether or not, if they do let them come in, are they going to encourage them to fill up the boats with people and leave? And so, I think that'll be something that may tee up next week's most interesting thing. Like, will either of those things happen?
Yeah, exactly.
But for now, I would say inflation reared its head this week. It's the reason why the markets have been kind of on the back foot. Yet the bond market has been very strong, and appears to be, really taking heed of what Jay Powell is saying and not worrying about it. Equities are a little bit worried, but not much. But we did have a down week in equities, and I think that they were basically inflationary concerns.
That's more than anything. I mean, you come in pretty hot at 5.4%. Yeah, that's what I and nobody seems to care. That's the thing that I worry about most.
Yeah, I mean, because ultimately, with as much debt as is out there and as much debt as we're issuing, who wants to have a 1%, 2% coupon bond? And you're getting chewed up to the tune of 5-6% by inflation. So that's a disconnect. It's got to be transitory.
Yeah.
If it's not transitory, then the entire fixed income market is going to get ruined. And, that's a whole different deal, because that would completely upend all these spending initiatives that are out there, because, our debt service costs would just explode.
Yeah, absolutely. Well, I mean, that's the scary part is, we just keep piling on. And I mean, it's not going to take much of a move upward in interest rates that's going to force, all of a sudden that puts the brakes on anything going on in the government. So, but people don't tend to listen to us, Tom.
Well, we're talking about the markets, and we have to be kind of agnostic about, I mean, we have to not necessarily be agnostic, but we have to certainly differentiate between what we think and what the markets think. I mean, that's what I hope people can appreciate, that, the kind of thing that we're bringing here. One of the things that I would say, you look at gold, for example, to get back talking about inflation, and gold's really done nothing for a year. I mean, it's
been so disconnected.
Well, for a lot of that year, it was because all of that kind of money is over in Bitcoin, and now Bitcoin has been cut in half, and has stayed cut in half for a while now. Bitcoin is still, I mean, it's literally half. It's 32,000, where the high was about 65, and Bitcoin has been in this range for several months now. So, going back to at least May. So, something's going to happen there. I think that you can't have that violent of a move in 1 year, and then kind of stay in a stasis where you're down about half. Either it goes to 100,000 or it goes to 10. I don't know which.
Yeah.
But anyway, that's what I got for this week.
That's your story, and you're sticking to it.
I'm sticking to it.
All right, folks. Well, thanks, Tom, for doing all that. Great stuff this week. Still,
send in your questions. If you have a question, send it in.
Absolutely. Tom is dying for questions, and we've been we've been in a little bit of a slump on questions, so let's fire off some questions and see if we can keep him busy next week. So thanks a lot,
good.
Tom, and thanks everybody. Once again, we're always out there in all the different platforms. We're on Rumble, we're on YouTube, we are on Vimeo, we are on all the major podcast channels as well. So wherever you see us, please make sure that you give us a 5-star rating. Make sure you subscribe to the channel, because there's a lot of extra shows that we're putting on in between the major shows that we do. And if you have questions, leave those questions wherever you're at, and we will answer those on an upcoming episode. So thank you. We appreciate you coming on, and we will see you guys back here next week.
Give me what I want.